Well, on Tuesday, we definitely had a 8-day win streak snapped, but not a bad day yesterday. Good start to today. Kind of some mixed earnings. Big losers, Snowflake melting in front of our very eyes. Urban Outfitters not selling a lot of pizzas. Then we got some decent reports as well here. A couple timely upgrades, stocks that have been in the gutter. Economic data 8:30. I mean, we always seem to move on that no matter what it is. Jay Woods 8:35 from Freedom Capital Markets. He's going to give us this his take on the markets. It's Thursday. It's almost Friday. Jackson Hole. It's pre-market prep.
Welcome to Benzinga's pre-market prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
Okay. Good morning, traders, investors, listeners to the show. Up 12 handles, 53.50, kissing yesterday's high. High of the rebound right now. A good 22 handles off that pre-market low. Buck perking up after just like a 3-day beat down here, up 30 cents at 101.21. TLT down here, 58 cents at 98.15. Crude quiet down here, trying to put in a double bottom at 72 and a quarter. Gold, after making a new all-time high a couple days ago, a little bit sleepy, down 11.80 at 25.35.60. Silver, flat as flat, 29.53. Bitcoin futures, they're quiet too. They're down $180, 61,550. Let's bring in Triple D and AB simultaneously here. And so far slow and steady this week. Dennis, no big surprises. Are we all waiting for Jackson Hole and
It's
see?
been choppy, just sitting
Yeah,
here the last 2-3 days and chopping around. Jim Tassoni was tweeting at me yesterday. We know Jim, we had him on there a couple weeks ago there. He's just saying his action S&Ps up, down, left, right, just kind of, just going nowhere. Just chop, 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 chop and slop. And maybe it is, the pause in action before Jackson. Maybe it's the pause in action before NVIDIA next week as well.
true.
You got a little lull in the earnings season. You got a company like Workday reporting tonight. You had a company like Snowflake reporting last night. You got a company like, Sentinel One report on Tuesday. But really, when you look at this calendar, it doesn't get started again until NVIDIA on Wednesday night. So just quiet in the earnings front, which maybe means a little pause in the action here. And obviously Jackson Hole commentary from Fed chairman tomorrow. That will maybe dictate, at least the next course of action for some of the interest rate sensitive names.
Yeah, and then a little just beyond that too. You're gonna have your jobs data coming up in the first Friday of September, right?
Mm.
Then you're gonna get some more inflation data, and then the big move by the Fed. But so far, slow and steady wins the race. I got Aaron in here in that spanking orange shirt there, looking sharp today. How you doing, Aaron? We'll let you guide us here. Where do you want to start?
Yeah, well, you got Snowflake up, so let's go ahead and start there. We had a couple of earnings yesterday after the close that are worth discussing this morning. So Snowflake, I mean, good job by Warren getting out of this thing. Don't know who got him in. We talked about that, but Snowflake reported non-GAAP EPS of 18 cents, beat by 2 cents, revenue of 868 million, beat by 18.67 million. But the let's see, the guidance, I guess, was below expectations. Just the report did not do anything to boost investor confidence. Stock trading down 10% this morning, $13. So Snowflake continues to be a disaster.
Yeah, just the avalanche on a 15-point expected move. That's about what you're down here, Joel, or 12 points or 13, somewhere in here. So it's the expected move. I think maybe the chat said it was 12 yesterday, but I mean, that's where you get down 13. You're right in that realm. I kind of thought they might come in and buy the dip because this market's hungry for tech, but then it's also selective as well. And Snowflake's been out of favor for so long. And I mean, once bitten, twice shy, maybe investors here, because the last quarter stock actually popped up on it, and then they just hammered it down. So, I mean, this stock has just been out of favor for a very long time. It's always had a nosebleed valuation. And I was talking with Todd Gordon yesterday, and he just made the point that this company's not expected to make money in the next 2 years. He's like, there's so many better places to be when you're looking at a company like Snowflake that, can't really find its way.
All right, we're just trading off the lows of the pre-market session. If you didn't get smoke going into the report and you didn't try and buy it 124 where it gave some false hope after hours, and you really think this low of the move is like a generational low here at 107.93. You're halfway back of this move. So, well, there you go. I mean, there's obviously risk in anything that you do, but let's look forward next couple days. See 120, 121. They put a little base in there. See if there's any kind of institutional interest, and see if it can turn up. As far as shorting it down, 1380. Well, sometimes those strategies work. But for me, being down that much in the area that it's come into, also some daily lows here, pair of daily lows surrounding 121. A big capital P on potential support here for Snowflake.
I did see someone in the chat mention it. This was a little bit later on my list, but we might as well get to it now. Joel, congratulations on the Peloton turning it around. Peloton reported, Peloton reported earnings this morning. And this is the first day I think I've seen Peloton actually Peloton closed up 5% yesterday, up another 10% this morning on the report. So reported an EPS, a loss of 8 cents, which beat the estimate of a loss of 16 cents. Sales came in at 643 million, beat the 630 million. Peloton says CEO search process is well underway and looks forward to sharing more when it has announcement. Initiates 2025 outlook. So things looking up for you, Joel. I mean, are you going to retire?
Yeah, I mean, I mentioned it tongue in cheek, if I bought, 10,000 shares here, it'd probably bring my cost down to like 65 or 70. But not going to be doing that one.
Never
I will,
frown, average down.
Yeah, good
A
thing.
wise man once told me that.
I will say, technically speaking, if this did come back down to that, I mean, you're breaking out of a quad top here. So if you want to try and buy it on the cheap, or you want to buy it here and then buy more when it gets to that area, sure. Spiked up close to $4. $3.95 is your pre-market high. I would just say this is a laggard. It's a laggard of laggards of laggards.
And laggards have been perking up a little bit. I mean, they have. It's been the laggard market in the last week and a half here. Lots of stocks that have really been ugly. We know, like the Nikesters and the Starbucks. And you know what, Peloton, when they're on that CEO search, they should have paid more for Brian Nickel. That's what they should have did. But I don't even know if they have any money at all. That was a joke. But I mean, Brian Nickel obviously had the Starbucks pop, but they better find a good CEO. Unfortunately, this business, just this, working out, staying at home, we're going to be on the stationary bike and we're going to plug into, our instructor online, has kind of went out, when the pandemic ended. This was kind of the end of this story as well. This is a great stock for a pandemic. So if the monkeypox, monkeypox spreads, starts taking over the world, then I'm going to go long Peloton. Until then, no, thank you.
We bought it in 19 because Lisa doesn't like getting up at 5 a.m. to go swimming like I do. So she said, "I want something here." We got rid of a treadmill or a bike or something that I think her parents gave us, that probably from the late 1980s, and so we had it. And then we bought a little of the stock, and I used it a lot. It really, like during the pandemic, I used that thing a lot. Now my shoes, I haven't even put them on. I haven't, I'll do anything. I'll walk around the block. But I mean, Lisa uses it 2-3 times a week. So even though it's not been the greatest thing in our portfolio, it's good for her health and her wellness. And that's the important thing. As far as the price action, well, not so great.
Next.
All right, let's keep it ticking. We've got a few other news stories. I mean, you guys mentioned monkeypox. Let's check in on some of those stocks this morning.
They popped. I looked yesterday morning and GOVX had come down so much. I looked at this like around 9 o'clock and I'm like, I'm like, this thing went all the way down. I'm like, if this starts to perk up again, like the monkeypox thing, this GOVX may be a buy. And then I looked an hour later and the thing was up 20%. I'm like, I just got to go with those instincts. Don't hesitate on it. I hesitated, didn't buy it. And then obviously, the thing's had a huge day yesterday, going from 5 to now 9. I mean, the thing's up 80% one day here, but man, it was a good buy. So when these things happen, when you have these huge spikes, and then you get the counter like 50%, 60% down in like a day, a lot of times there's another spike. And this is what we saw yesterday. Now, I'm not saying you come in here and buy it at 916 because now you have major resistance up at everybody who paid double digits for this stock. So the time to buy this was yesterday morning. Wish we would have talked it. Wish we would have looked at it on the show, but that wasn't the case.
What are the other I know there's this ADR Bavarian companies that trades overseas. I thought I saw this.
Or all the monkeypox. Chad, help us out. We got GOVX. Who are the other monkeypox stocks?
This is one. This has had a nice move. This might be, now don't quote me on this. This is an OTC. They might act. I think there's only one company that has a vaccine.
VRAX Labs, you talking about? VRAX? Chat's all over. VRAX.
I don't know.
That's another one. SIGA. SIGA is another monkeypox one. SIGA Technology. This comes from the chat. So, and then SIGA. Like a cigarette. No, not like a cigarette. Like a SIGA. Like a
SIGA.
And then, EBS, Will's saying EBS. I don't know. That one didn't move as much, though. GOVX looks like the way. The GOVX and the VRAX, those two look kind of the same charts. So these look like your monkeypox.
What about Inovio? Inovio always comes out and says they have the vaccine for whatever the thing is at the time, and then it goes down.
What's the symbol on that one?
What's the symbol on Inovio?
Let me try.
Novia, chat, symbol us.
I got it.
I know. Oh yeah, I know. I should know that one.
When COVID first popped off, this was one. I mean, you can see where the stock went crazy, and then I started looking into the company, and you can see it on the stock chart. Every single time there was like a Zika scare or an Ebola scare, Inovio would come out and say,
we stock then right now. They're probably going to come out with a press release anytime.
Yeah, Inovio would come out and say, we have the vaccine for this, and then the stock would pop, and they never actually came to market with anything. And the same exact thing happened during COVID. And I remember talking about it as a short during the time because I was like, this you could see this company has done this before. It happens every time. And so we'll see if Inovio tries to do that with Mkts as well.
I'm writing Inovio down. We'll keep an eye on our Benzinga Pro. And if that shows any type of headline there, we'll be like, yeah, let's go. LFD.
What about let's just do something fun exercise here. What were some of the what was the COVID drugs? They made the
uniforms,
the plastic. Was it Lakeland?
Oh yeah, Lake LAKE.
LAKE.
That stock's still done good though, Joel. Lakeland. Look at it. That's actually held up really well. That one's done highs lately. And every time there's a pandemic, they do well too. That's a good one to think about. If the monkeypox goes crazy, then we got to all get our hazmat suits from Lakeland.
And what about
there was another one too.
Was there respirator stocks too?
Yeah,
because everyone was going to be on that.
The thing is with this monkeypox, to my understanding, it's not as contagious, and which is a good thing because it looks pretty damn scary. But it's not as contagious. It's not like COVID where somebody coughs at you and you're all of a sudden got monkeypox all over you. So, which hopefully it stays that way. But I don't think we're going into this major contagion here. But it's interesting to watch these stocks.
I don't know. The chat probably, I don't know, if this is controversial or not. But I've been hearing about a lot more people in the past month or so talking about getting COVID. I have 3 different friends who's either
everybody's got COVID.
Parents, I know, but I'm saying, have you guys noticed? Does it feel like that too, or is it just the people?
I feel like my kids have COVID every other month. There's so many strains of this now, and they're all dumbed down to the flu pretty much. I mean,
yeah, it's not the same. It's not the same.
It's not like when it first came out. The COVID when it first came out, it was stronger. It weakened itself to survive. I mean, I actually read some stuff on this. viruses naturally weaken themselves because they don't want to die in their hosts. So a lot of these viruses, so they naturally weaken themselves so that they can survive. So I think that's what we're basically looking at is COVID's.
Dennis, you've been extremely healthy lately.
Don't jinx me, Joel. You know what's coming? What is coming? School season, September. You totally just jinxed me here now. I'm going to be like coughing up a storm here next week. And my kids go back to school in a week and a half, and then they bring home all the diseases from school because all the kids don't wash their hands. They don't cover their mouths when they cough. They share their food. They share their boogers. They share everything.
Their
and they
boogers?
bring it home. I'm just a joke, but maybe not. Kindergartens, those JKs. They're like, oh, look at this one.
A week and a half. Wow, they start school late up there in Canada.
Day after Labor Day.
Nice.
Day after Labor Day. You guys week before Labor Day, I think. We're the day after.
I would.
We do everything late in Canada. We get everything late. You know, Cybertruck's not in Canada yet. No, that's next year. We do everything late in Canada. First, we watch the states for our queue, and then we get holidays late. You guys had February President's Day, and Canada's like, well, we don't have a holiday. And why don't we have a holiday in February? And government officials, that's right. The states have a holiday. We have to do what the states do. And then they came up with Family Day for February. It was about 10 years ago. So we always look at the states and we figure out what they're doing and then we copy them. That's how we work.
You guys, one thing you did get before us is a recession.
We did beat you on that. It's true. We did beat you on that.
Not a Stanley Cup, though.
Oh, do not mention Oiler hockey.
Well, I didn't even.
This show is off the rails now. I'm so depressed.
Yes, come on.
I didn't even bring up the Oilers. There's many teams in Canada. It could have been the Canadiens. It could have been the Maple Leafs. It could have been
one goal away. Oh gosh.
Now
I'm done.
Let's stay on Canada. Let's talk about
Canada. While we're talking about Canada.
Oh, rail strikes.
Yes.
Oh, see, I was going to go to Toronto Dominion Bank.
Yeah, we got so many Canadian stories today. It's Canada Day on PreMarket Prep.
Oh, Canada.
All right, so we'll go. Let's start with Toronto.
Half Canadian.
Let's start with TD. We'll start with TD, and then we'll go to the strike after this.
Okay.
So TD, Toronto Dominion Bank reported earnings, and they gave some color into a charge that the bank is facing based on a money laundering thing. Dennis, what you probably have more details on this than I do.
Well, I'm watching last night and Charles Schwab starts getting hammered and I'm like, nobody's got the headline again. I'm like, this is Walmart JD all over again. I'm like, somebody's done an offering. You know, it's out there. It's definitely out there. You can tell by the way the stock is trading. Went 64.5, 64, 63.5, 63, 62.5, 62. And then finally we get the word, yes, it is actually TD dumping 44, wrote it down somewhere on this mess of a sheet here. Something like 44 million shares. So they need to raise $2.5 billion because they got a bunch of fines for money laundering that they've got to pay. So they're dumping a big chunk of their stake in Charles Schwab. Price went off the board at 61.65. Joel, man, when they're dumping, like Walmart dumping JD and Schwab dumping or TD dumping Schwab, they get the bottom. They seem to get the very bottom. Stock did bottom down there at 61.35. It's bouncing back here this morning. But if you're wondering why Charles Schwab's getting hit, you can thank the Canadians TD Bank because they did some money laundering or some clients did some money laundering or something. They got some fines. So that is why Schwab is getting whacked. TD also coincidentally, which is probably not that much of a coincidence, also reported earnings here this morning, AB. So you may as well give those as well.
Which earnings? Sorry.
TD
reported earnings. Company reported EPS of $2 Canadian dollars and 5 cents.
That's like a lot less.
Which missed the $2.07 Canadian dollar estimate. Sales came in at $14.17 billion, beat the $12.58 billion, but because you have that bottom line hit by charges there, the stock actually dipped down to around, I'm seeing around like $57. It has perked back up to about $58.65, but trading down about $1 this morning, down about 2%.
I don't know. Yeah, it's had a good run back. Everything has had a good run back. TD Bank has had a good run back. The Canadian banks are all dirt cheap. Like, I mean, you look 5%, 6% dividends are across the board. They're all trading 10, 11 times earnings. They've all been cheap for a while, though. And really, if you look at the Canadian banks, we're just doing them all together. They've gone nowhere basically for 7-8 years. TD Bank was $60 back in 2018. It is $60 here today. Yes, you got a 5% dividend in that time, so your money wasn't, doing nothing, but it wasn't doing a lot of something either in a great bull market here. Royal Bank, probably best of breed. It's done okay. It's went from 80 to 112 in the last 6 years, which isn't even that great. I own some Bank of Nova Scotia, which has been the same type of dog. It's actually down over the course of the last 6 years from 60 to 47. There's Bank of Montreal, where I do a lot of my business as well. It's done the same exact thing. $80. Basically, looking back at 2018, it's $86 today. Canadian banks are sitting there and just like basically bonds now. They just pay your 5% dividend. The stock prices don't go anywhere. I don't know what's going to get the Canadian banks going, but they have been epically disappointing here over the course of the last 6 years.
A lot of times you tie it to oil, a lot of oil exposure and
Bank of Nova
oil's
Scotia, especially when oil is really getting hit. Bank of Nova Scotia has a lot of business out west. So, they obviously have a lot more exposure. If you start talking about companies being in trouble, Bank of Nova Scotia would have some exposure there. But we're not in that situation now. We were a few years ago when oil was really getting whacked and we saw negative oil there for the day. I mean, then you're thinking, holy crap, all these oil companies going to go out of business, but oil came back.
I'll just say TD is a real curveball because it just had a big run. It's well off its pre-market low, down $1.11. So I don't know if anybody really cares. Look at resistance at the bottom of yesterday's range. Bottom of yesterday's real tight range yesterday. So see if you find sellers. See if it tries to get green today. Talk to Chuck. Schwab, that got the hit, and boy, they took it right down. They priced that thing right at support there. 60. What did you say the price was?
61.65.
Okay, just above the recent couple lows of the move, so that got snapped up. I don't know if it's going to get back down there again. And I'll just say, usually these are like puking moments, like the JD.com yesterday. The puke, right? The sale that turned out to be a pretty good buy. So I don't know if you're looking to buy Schwab or not, but it's getting hit, and it's not necessarily like a fundamental thing. Like, they didn't. I know they've been having some problems with their systems and stuff, and I see Bill's thinking or Jay's thinking of leaving them. But I mean, this is just because someone else had to dump a lot of stock. It's not like
same thing. JD. It's a repeat of JD from yesterday with Walmart.
Yeah.
One issue I have though is Charles Schwab. You think about how much some the financials have come back, and they've come back a long ways. Charles Schwab has not come back that far. I mean, we were talking about Charles Schwab at $60 back when we had the regional banking crisis. Not that Schwab's a regional bank, but they were coupling it all in with that. I mean, a lot of these other financials have been really strong. Like since 2023, you got Bank of America is up from 30 to 40. You got Citigroup is up from 45 to 60. You got Goldman Sachs is up from like 300 to 496. Morgan Stanley up substantially in that period as well. And then you have poor Charles Schwab sitting here and really doing a hell of a lot of nothing. It is definitely relatively weak, and that is somewhat of a concern. I do think these things typically do bounce back from these offerings, so maybe it does bounce back. You may be able to pick it up last night. I know one of my followers was picking up 61.35, got the bottom, fantastic buy. I think it could bounce all the way back to maybe the 64.5. I don't know if not doing that today, maybe, but could get back there eventually. But you got to be concerned overall with the relative weakness in Charles Schwab compared to its peers.
I mean, it just got, when the market was making new all-time highs in July, this thing got shellacked. I mean, and that it was off our earnings report. I can't see exactly what the report. I'm looking at it, and look at that. It went from 76 to 62 in like 4 days. I mean, that was someone just puking it out. Had the rebound longer term. You got to look at the $62 area, but boy, that's a lot of technical damage. Let's take a look at IBKR. I just want
been an unbelievable stock.
Yeah. Yep.
At Petterfee, how do you get somebody to run something better than him? I mean, IBKR, obviously, I'm a customer, but they've just been, and to be honest with you, like out of all the retail brokers there, who offers you more than IBKR? I mean, they offer you so much, like we're talking retail, obviously here. We're not talking like prop firms, that offer a lot as well. But classic retail accounts where you can open an account in half an hour. You think about like Robinhood not even letting you short stocks. I mean, IBKR feels like it's got all the tools and bells and whistles that a lot of prop firms do too. They don't have the margin, which is why, big thing with prop. But I mean, it's been an unbelievable company and an unbelievable stock.
Hey, we've never had Petterfee on the show, AB. You think you can do some digging, try and get him on the show?
Sure, why not? I was gonna say, interactive brokers might have all these different things, but Robinhood's got that gold credit card, Dennis. That's something you might want to check out.
Maybe I gotta go switch to Robinhood. What I like Robinhood, like because they came up with this 24-hour trading, and obviously IBKR does it now too. But I mean, it's kind of cool to be able to wake up at 9 o'clock or or in the middle of the night. Not 9 o'clock's a bad sleep because I wasn't sleeping at 8 o'clock. Maybe I am. So go to sleep at 8, wake up at 9, start trading again, take an hour off. But I mean, the 24-hour trading, I use it on IBKR, and it's cool. And it's obviously same market maker Robinhood's got for the most part. So they've got, very similar markets there. It's cool. I mean, the 24-hour trading, I didn't think they'd ever be able to figure out how to do it because of the dividends. But the way IBKR does, and I don't have a Robinhood account, so I can't, say if they do it the same way, is they don't let you trade the stocks that are going ex-dividend and they mark the trades for the next day. So when you're actually doing like a trade at 8:05, it's actually marked for the next business day. So that figures out that ex-dividend problem.
Got it. All right. Well, going back to earnings reports, we do have a few more from yesterday that we did not cover. Let's start with BJ. We'll go to BJ's Wholesale Club Holdings, ticker BJ. Reported EPS of $1.09. Beat the $1 estimate. Sales came in at $5.2 billion. Beat the $5.14 billion. Guidance of $3.75 to $4. The estimate was $3.93. So the guidance came in a little light there compared to the street's estimate. And the stock taken, talk about wholesale. Stock's on sale right now. Stock is down $6.50, 7.3% on BJ Wholesale.
It's been a quietly really good stock, and maybe and I actually I didn't know if you're on the show that week, Joe, but I've got my Costco membership back, and I went to the Costco for the first time. Not that BJ is Costco, but I tell you, there's some stuff in there that actually is quite a bit cheaper. So BJ is the same way. Like when you're buying in bulk, you do get stuff cheaper. So, and I've never been into a BJ's Wholesale, but I'm assuming it's the same thing. You buy in bulk, would get you a little bit of price break there. Maybe people are coming into these wholesale shops, and obviously, BJ didn't have the greatest quarter, but I'm just looking at the overall performance in the last 4 years. $20 to $80 is not nothing, Joel. I mean, it's been pretty much straight up. So, you got a company that's getting a pretty good dip here, and maybe this is going to be the cooling period, and they do have cooling periods. But overall, this stock's been an uptrend for a long time.
I'd say buying on weakness, wait for the $80 area. You had 4 lows in that area before the blast up to almost to $95. Buying on weakness, that's what I would look for. I think if you get back above this low at 82, you're 80 cents away from that. You might have to be scrambling, lifting offers here because there's a big gap going into yesterday's range at 87.18. We got about 12 seconds here, Dennis. We have some numbers coming out at 8:30.
What is the initial jobless claims? Going wide.
Yeah.
Thank you.
Going
10-second
wide.
warning. Cancel all.
Okay, 1 minute chart. I think we have Chicago Purchasing Managers Index too. Oh, we got a little dip dip down.
They pick me off. They like picking me off.
Did you not cancel in time?
No. I got it canceled.
Okay.
Dang, why did I cancel? We dipped and ripped. That's when you want to be out there. That's the perfect scenario for a market maker.
Chicago Fed national activity for July negative 0.34 versus positive 0.03 estimate. Initial jobless claims came in. I'm seeing 232,000 versus 232,000 estimate. So exactly in line. 2020 or 228,000 prior. So perked up a little bit from the prior. Continuing jobless claims. 1,863,000 versus 1,870,000 estimate. So a little light there on the continuing jobless claims. So a little bit of a mixed bag there.
Don't know why people hit it down to 56.45, but we got a good level on the upside, and I'll give you the level, I'll give you our range, and then we're going to bring in our guest, Jay Woods from Freedom Capital Markets. But you have yesterday's high is right in this area at 55.25. We're pausing, and then go all the way back to July 18th before we had the big slide in the market a little on in August. You had a high at 56.64. So there you go. There's a couple resistance levels for you to take a look at right now. But we started that 1 minute bar at 51 even, and we're at 53.5. So right now, still price discovery here off those numbers, but it's all about what? Jackson Hole tomorrow. We know that.
It is. Bring up the TLT. We'll just look at the action there too. I do see the TLT trading down here a little bit, so it has got a little bit weaker, but it's been weak all morning. So we've had a slow, steady leak in here in the TLT, I believe. Yeah. So we're coming off a little bit. What is that? Wait, that's not the chart. What's wrong with your chart? Give me the intraday chart. TLT's way down.
I'm sorry. I had the futures up there. Sorry.
Yeah,
Boom.
there.
Yeah,
We've been a slow, steady leak.
the TLT is. It was down yesterday too, and the market kind of shrugged it off. So we're getting mixed
kind of
signals
disconnected
there.
from it. Yeah.
Yep. At least at this time.
All right, let's go ahead. I see our special guest of the day hanging out backstage, Mr. Jay Woods. We love bringing Jay on. Without further ado, let's give Jay our very special pre-market prep welcome and see what Jay's been watching. All right, Mr. Jay Woods, CMT from Freedom Capital Markets. How are you doing this morning?
Hey, I'm doing great. Thanks for having me back.
Of course, we love having you on here, Jay. A lot has happened since last time we spoke. Of course, you go back a couple Mondays ago. It was the, our version of the Black Monday. It was the Japanese yen carry trade that lasted all of about 24 hours. Walk me through what your thought process was while this was going on, and where do you think we sit now?
Yeah, we're kind of back to where we were before that even happened. When I see the VIX spike above 60, that was crazy. Put that in perspective. It was the third highest reading we've ever had in the VIX, and then it was bigger than 9/11. Like, are we serious right now? I know we shut down for 4 days. Maybe that calmed the VIX down a little bit. But my God, there is panic. There is fear in this market. People are jittery. And to think that we've gotten the all clear with this nice rally, which, hey, I think we overreacted clearly on August 5th. But we got a lot of things we're going to focus on and seeing some headlines that may come up. We'll talk Jackson Hole in a second. We'll talk about that September 18th meeting. We can talk election. But I don't think this is an all clear. And you may hear a lot of technicians come on and say double top in the next few sessions here with you guys. I don't look at it as a double top. I look at it as consolidation, and we'll hit some resistance levels. Maybe we will make a new all-time high if Powell says something we don't expect. That would shock me, to be honest with you. But that August 5th moment, there were a lot of factors in play. Geopolitical concerns over that weekend. Harris getting even with Trump in the polls, and then we had that unemployment number on the Friday beforehand that kind of basically affirmed that the Fed screwed up at their last meeting. They should have cut rates when they didn't. The minutes basically told us that yesterday. Like, it was a coin flip. They could have cut rates last time. They didn't. Now we know they're going to cut. The question is, when he telegraphs this tomorrow, is it going to be 50? Because I think the market's anticipating more than a quarter point cut as early as September, and I don't think they're going to get it.
What are the odds again, AB? Bring up that chart while I'll ask Jay just to further.
It's like a third, 2/3, a third for 50 as of yesterday. I mean, that thing changes like the wind. So
I mean, if he comes in dovish and starts hitting about 50, we could get a rip roaring rally on that. So maybe that is what we're looking at for tomorrow is really the commentary. Are we getting 25 or 50? Because here AB just brought up the current odds is 28.5%. for a 50, 71.5% for a 25. It's 0 for nothing. So we've already completely baked in at least a quarter of a point, and there's still 28.5% of people who are holding out for a half. Are we? So let's just take away from the recent rally. Are we now like green light for stocks overall, like going into next year, if we're really going into an interest rate environment that's going to be more accommodating for stocks?
Well, long term, yeah, I think we are.
Like here, take off the short-term rally. Yeah.
Yeah, exactly. You take off the short-term rally. I think everything technically has played out the way it should in an election year cycle, in a seasonal cycle. August is up slightly right now. We haven't had an up August-September stretch in over 3 years. We'll see if we can break that string. I don't think we will by the end of September. Most markets bottom in October, and then you talked about the VIX. I went back and I looked at 2016, 2020. 2020 was COVID, so it's a little skewed, but the VIX had spikes in both those years early on, and then September, and as we got close to the election, we had another spike. So I think these headlines are going to cause a little angst, and I don't think it's all clear right now. But once that election is settled, go back to 2016. Controversial election. Trump was involved. 2020, controversial election. Trump was involved. Didn't matter what the outcome was. We rallied from election day into the end of the year. And I think the setup is there. And then you look at the earnings growth story. When Walmart and Target are doing what they're doing right now, the consumer's doing okay. It's not the ideal leadership. What we're seeing is a pause in those Mag 7 names. And I know next week, I have a feeling you're going to talk about NVIDIA a little bit. I don't know why I have this premonition. Yeah, but let's see what they do. Last August, NVIDIA was the tell to me that the market was changing. It had its best quarter ever. It gapped, and watch Friday in the market, just like I watched NVIDIA on that August of 2023. It gapped on the open, and the gap filled. It closed up a dime, and then it went down from it was trading in the 400, so it would be 40 now. From 480 down to 400, it chopped sideways, worked its way up, and broke out in January. We're seeing consolidation in those Magnificent Seven names right now. Will this be enough to break it out? We saw that happen in Walmart. I don't think it's going to happen in NVIDIA next week. I hope I'm wrong, but yeah, it's an interesting time where the leadership, staples, utilities, the equal weighted S&P 500 is outperforming the Magnificent Seven for the first time in a long time. So this is healthy, but it's not sexy. And, sexy, VIX, you get more clicks, and sexy sells too. We may not get sexy until the end of the year. Clicks. So
I've never heard that.
The higher the VIX, the more the clicks. You've never heard that? That's as old as
that's a new one, man. That is a great one. Jay, Philip Hugh mentions here in the chat that, we are coming into an election, and, the Fed is supposed to be, just focused on, its dual mandate. And maybe me and Phil are the only one, thinking this, that, no rate cut at all. I mean, if there's ever a point where Powell's in a position of strength here now, if the market was down at 5,100 or 5,200, and the Japanese yen thing was still going on, I think his hand would be forced there a little bit. But, man, don't you want to save the bullets in the chamber for when you really need it? And right now, I mean, it's a preemptive strike. Yeah, he was a little slow on inflation. So what I'm asking you, so no chance. Rates are going. We're flipping the cycle, and we're going.
There's zero chance.
Zero chance. Okay.
There's zero chance of no cut. He's going to cut, and he should have cut last time. And yes, people will say you can't do this during an election year, because whatever happens, one side of the aisle is going to condemn him for not cutting. The other side is going to condemn him for cutting. You're making this party look good right now because the market's getting that tailwind. Well, guess what? It's already baked in. I think, and I hope I'm wrong, but I think we've already bought the rumor. And what's the other side of that old adage? Sell the news. And I have a feeling we're going to get a sell the news event at first. But I think, you look at the data, when we cut rates in a non-recessionary time, and this is not a recession right now, I'm sorry, but it is not, the market will rally 3 months later, 6 months later, 12 months later. And what is the one sector that does really well? Small caps. And I've been early to this party. I know I've touted small caps, and I'm getting my head kicked in by a few people, and deservedly so. But small caps have yet to make that all-time high. They got a little way to go, but I think 10%. But when they move, as we saw in the beginning of July when we had the rotation, they move quickly. It happened October 27th to December 23rd last year. They were up 27%. So the setup is there for small caps to finally catapult, and people just rush into that trade. And I still think there's a leg there. And historically, when you do start to cut rates, and he's not going to cut 50, I'd be shocked, especially in an election year. Now, no, go ahead. You want to add fuel to this political narrative? Cut 50 points. People are going to, on the right-hand side of the aisle are going to be like, what are you doing? But you mentioned it. You mentioned he was late. He was late when we started raising rates. He is late now because we should have had a quarter-point cut. And I go back to July of 23. That last quarter-point hike was so unnecessary. He could have eased off on that and kept it at 5% and see where we go. But the Mr. Data-dependent Jerome Powell, he is probably just going to test the waters with 25, see where we go. And I would be shocked, if we got maybe one more at the end of the year. I'm not in this camp that they're going to cut. I don't see the need for that right now.
25 and then maybe another 25 and done.
Yep.
Because some people are calling for 50, 50, 50. I've seen I'm like, are you crazy? There's no way that's
these are the same people that called for 6 in the beginning of the year, and that's when the Russell took off.
Emergency
and then
rate cuts.
Yeah, yeah. Well, that was the other thing. Now emergency rate cuts because we had one bad day that lasted all of 24 hours, as you mentioned, and cooler heads have prevailed. And thank goodness, the Fed did not jump to do something, because if you have an emergency cut, when did we have an emergency cut? COVID. Guess what? That was an emergency at the time. If you remember, people were dying. We had no idea what was going on. The Japanese yen carry trade. No, I'm sorry. I mean, I'm not too astute in exactly what could be the ramifications of that. I think there could be another, shoe to drop there. Did it resolve itself in one day? I don't think so, but we may see more headlines there. And the market is still jittery, going back to my original point. But let's look at some charts. I see you got some fun charts up there. We can talk economic policy. Yeah.
So speaking of the chart, Jay, I mean, it looks like as we're running up on this, Fed decision on the 18th of September, the S&P 500, the overall market, we could be at this inflection point where we're kind of creeping back toward all-time highs. It could, some people with a bearish outlook might say it looks a little double toppy. Other people might say we're prone to break out. Which side of the aisle would you find yourself on?
Yeah, near term, I'm in the camp. If you were smart enough, which most of your audience probably was, to buy stock on that dip on August 5th, you got to lighten up a little bit, because we are at an inflection point. I think we could have a near-term double top and a chop, and we go sideways. We could have a 5% correction. That brings us down to, 5,200? That's not out of the realm of possibility. We got there in 3 days before. So I don't expect us to explode upward immediately on that initial rate cut on the 18th. I don't think he's going to say anything at Jackson Hole tomorrow that's going to cause the market to explode. Watch how we close. If we do get a pop, see if we can hold it into a Friday close coming into the end of August the following week. I'd be surprised, but we'll see. The one stock, and I hate to put it on one stock, but NVIDIA, let's see if that can get back to that 140 level as we go into earnings and eclipse it and hold it. I don't see it happening, but it very well could. But if it does, then oh my God, the leadership is there, and it will take a lot of boats with it, and the boats that are important because they're the largest market cap stocks. But right now, no, I think we're near term. Let's take a little off the table, see how this shakes out. And if I miss the initial move out on a breakout in the S&P 500, I'm not afraid to chase with stops in place, because you'll have that risk reward setup where, if it's a failed breakout, you want to get out quickly.
Yeah, that's a great point to mention. And you look at different trades and different scenarios. Like if you were trying to buy last Monday, right? you closed your eyes, you did it, you had a reference point. But once it moved away from that area, and it didn't stay there very long, you had a reference point. Now, if you do get the breakout, you make sure it doesn't turn into a fake out. So definitely different approaches to the market.
Yep.
What about the defense sector here?
Mm-hmm.
You're looking at I mean, things are heating up all over the world. Doesn't seem to be getting much attention, but the
Yeah.
U.S. Aerospace and Defense ETF is paying attention here. Just
Yeah.
hovering, consolidating near its all-time highs. Talk about that and some of the ETFs that are related to it.
Yeah, when I get a lot of questions, what sectors do you like? What party do you think is going to, help the most? And there are two I like regardless of outcome in this election, and that is the defense sector, the ITA, which is knocking on that door. And then what I do when I look at these sectors, I look under the hood, and yes, Boeing is in there, and Boeing has held it back, just like CrowdStrike has held back the hack and the cyber ETFs. But when you look under the hood, you look at Northrop Grumman, you look at General Dynamics, Lockheed Martin, Raytheon, these stocks are best in class, and they're making new highs, and there's strength there. And then here's one. Look at GE. GE is one of the biggest players in that space. It's been consolidating now for the better part of 5 months. A hell of a run. Talk about splitting up companies and being the beneficiary of a split. GE had done nothing. It was dead money for years. I may even throw decades out there. And all of a sudden, the sum of the parts was greater than the whole. And when people talk about Alphabet, I think we have a story lining up there too. But GE is leadership there, and it's knocking on the door. So I think you got to watch this sector closely and watch the individual stocks within it. It's, as you mentioned, a lot of geopolitical concerns, a lot of bad things happening in the world, unfortunately. But this is a sector that does well. I think both candidates are going to have to and continue to spend on defense. So you look at ITA and then you look at cybersecurity. We know how important that is. And CrowdStrike, CrowdStrike had their, I don't know if I want to go as far as their Bud Light moment, but it's going to take them a little while to come back from this. I don't think you want to jump into it, but what people are doing is they're reassessing, all right, is CrowdStrike the partner I want to be in? There are other great names within the cyberspace that have been doing well. You look at Fortinet, FTNT, you look at Checkpoint, and then now you look at Palo Alto Networks. Palo Alto is a great example. If you back out the chart on that one, you see some serious gaps. And when they miss or when they guide, it gets punished. But long term, the overall trend is there. The strength is there. So CrowdStrike will probably come back one of these days, but it's not going to happen overnight. If you want to buy it, put it away and not look at it every day, then you should be fine. But I think the safest way to play cyber is using the ETFs. It's not as exciting as owning an individual stock. But if you look at Hack, on the verge of a major breakout, it may have just done so. So risk reward setups are there for traders. I had this difficult job of coming from a person that traded as a day trader, professional day trader on the floor for 28 years, now into this analyst role, talking to clients who are a little more long-term based. So I try to balance it. I know your audience wants great ideas and you give them to them every day. So I'm trying to thread that needle when I talk to you, looking, all right, long-term risk reward, good setups near term. And, I think that Hack, look at that little rounded bottom and cup and handle, possible breakout. The stocks within the ETF are great. If you can pick the right ones, then you're going to do better than the overall ETF. But if you pick something like a Cloudflare that had a rough quarter last quarter, consolidating could go on a nice run. You missed a little bit. If you had CrowdStrike, you got hurt. But if you had the basket, you avoided the downdraft that you saw in some of the individual names that didn't, help the overall ETF. But individually, they got clobbered. So I think from a safety point of view, you go with the ETF, and to some people, that's a cop-out. I want one name. I want it now. And then I mentioned this one on Bloomberg yesterday, and even the host goes, Cisco? Look at Cisco for me. You want to look at a nothing chart, go back 20 years on this thing. It's done nothing. I don't know if this is the make or the break, but on a short-term basis, it broke an intermediate downtrend. The story with Splunk, I think, is starting to finally be digested. That was a big merger when they acquired Splunk, which is in the cybersecurity space. It finalized that deal at the end of March. So we're about 6 months in. I think they're starting to reap the benefits of that. We had a nice gap, nice breakout. I believe we're above the 200-day moving average, just memory. I can't see it on our chart in front of us. But the risk-reward setup there, intermediate term, we got another 10 to 15%. Okay, long term, my God, it's got a lot of wood to chop, but the direction is there. Like talking about this is like talking about AT&T and Verizon and stocks that just no one knows. But it is still in the Dow. I don't know how, but it's still in the Dow. Don't get me started on Intel being in the Dow. But Cisco to me looks like something's changed, and when something's changed, you know what? I like the risk-reward setup there, and I'll take a flyer on it. Yes, I've owned it in the past. I owned that stock for a decade. It did nothing for me. But now I think that it's interesting, and it's worth taking a flyer, but it's not going to give you an NVIDIA day or an NVIDIA return. So if you like boring, I'd give you Cisco.
One more thing, Jay, before we let you go.
Yeah.
I see in the background there, you have your setup, and I believe that's a Bloomberg back there.
Yeah.
People always like to, like different setups. What do you look like? Like you're probably monitoring the markets, like 24 hours, like people that like us are involved in the media. But like, what's the first like a little bit of what you have on your setup back there, and then like. What's like your go-to?
I love these questions. Because I ask this question to my colleagues all the time because I always want to learn. So if you can see, I'm pointing like a weatherman. These black boxes behind me, every month I update that. That's every major sector ETF, the top holdings within it. So you go top-down approach. I talk about hack. What's in the hack? What's in the ITA? What's in the XLK? Apple's only 4% of it right now. How the hell did they do that, by the way? Please tell me how Apple went from but as someone that follows the market, you better know that NVIDIA is now a hell of a lot more important than Apple was. So you want to know what the top stocks are in each sector because they're going to move the markets. And then when I go on TV, when I talk to people like you, that's what people want to talk about. They don't want to talk about or is it Lindy, the top stock in the material sector, but you got to know what the top stocks are, Sherwin-Williams. So I follow that and I keep it to my left because I'm not smart enough anymore my memory is starting to go to rattle these things off like I used to. So one, you go top down. Then I always go top news. I want to see what's going on. I want to see what's trending. My Twitter feed, or is it X? I will not call it X, but my Twitter feed, which you guys are a part of, I follow the smartest people I know. I look for great ideas. And if I get one from someone, I better attribute it to them. I want to give people shout outs. And then when someone confirms an idea I had, like perfect example, I was on a different network yesterday and I talked about the same thing I'm talking about now, hack. I go home, I'm in bed, I'm watching my Twitter feed, Ian McMillan, another CMT who I have great respect for, the chart life, give him a little shout out. He is highlighting hack and a possible breakout. It confirmed my thoughts. I was like, holy crap. JC Peretz, Brian Shannon, friends of mine in the industry. I'll get ideas. We'll bounce ideas off of each other. So I use that Twitter feed not only to share thoughts, and I have to kind of be careful what I share, but to get some of the great ideas from minds like yourself, from shows like this, short-term, long-term, depending on my audience. I do try to go 3 to 6 months. When I look at things, I miss day trading. You have no idea how much I miss it. But I have rules and regulations in place where I've got to be careful what I do. When I talk, my firm has been blessed to let me talk about individual stocks, mostly under the context that we go top down. We talk about hack, then we break it down, then I give you Cisco. Is it my best idea? No, it's not my best idea. I believe in
What's your
the
best
long-term
idea?
stocks. My best idea is just buy NVIDIA and put it away and don't even look at it. But we have to do it. It's no.
Jay.
That's a good idea.
Yeah, I know. Where did I come up with? Okay, I'm going to give you. I'm going to pat myself on the back, and I didn't do this, but my father, he saw me in 2019 talk about the stock, like, oh, this is great technology, gaming technology. When I talked about it, and he listens to these shows, and he'll buy stuff that I talk about, and he bought it in 2019. Then. What was it, 6 months ago, 3 months ago? He goes, can you explain this 10-for-1 stock split in NVIDIA? I'm like, oh, you still have that? And he goes, yeah, I bought $3,000 worth in 2019,
Oh my
and
God.
I never sold. I'm like $3,000 in 2019? I'm like, he's got over 100. I'm like, oh my God. Yeah, so set it and forget it in some of these big names, but it's not fun. This audience, Yeah, it's like your 401k. This is an old thing I say all the time. When you start looking at your 401k in a bull market, we're getting toppy. It's like I try never to look at it. I have 2 days a year I set aside to look at my 401k. 2 days. The end of the first half, the beginning and the end of the new year. How did we do? And I have time-based approach. As I get older, I get more conservative, and I try not. That was the best advice I got as a 21-year-old coming onto Wall Street. Just 401k, buy the market, and you put it away. And when the market sells off, I tell the younger audiences I talk to, you are getting stock on sale. This is great. August 5th, we had a sale. We had a fire sale. Warren Buffett sold Apple. That was the other thing that happened. Oh my God. You know why he sold Apple? It was 50% of his portfolio. That's horrible management. I mean, great call, don't get me wrong, but what fund manager puts 50% of their assets, especially something like Berkshire, into one stock? That's crazy. Worked out. Now it's 25% of his portfolio. He's cutting back Bank America. Okay, but guess what he did on August 5th? I bet you he bought stock. I know they bought some Ulta Beauty. That was the latest one. That was a little head scratcher. Okay,
asset allocation. Jay, this has been an incredible segment here. You have taken over and captivated our audience. I'm gonna let you go with one thing.
They hate me.
One thing.
Yeah.
Okay, are you ready?
Mm-hmm. Yeah, I'm ready.
Can you see what I'm doing?
Oh, is that a Fly Eagles fly there? You got to go wide shot for the Fly Eagles fly.
Okay,
yes.
okay.
By the way, that was one of the favorite segments I've ever done on any show was when Benzinga did their football preview. Ryan Dietrich did a great thing when there was the Bengals on the clock. I got to come on when the Eagles were on the clock. Probably my best call in anything I've ever done. Not only did I nail the pick, I nailed the next two, and Howie Roseman, was a genius. And then if you watched Hard Knocks as an obnoxious Eagle fan, seeing the Hard Knocks Giants behind the scene when they're letting Saquon go, as long as Mara comes in, as long as he doesn't go to the Eagles. Where does he go? He goes to the Eagles. I didn't even want him. I love DeAndre Swift. You Chicago Bear fans are getting a gem in that St. Joe's Prep Georgia running back. But my God, it was fun to join you. It's always fun. You bring out this ridiculous energy in me that I have to now bring to the stock exchange and go talk about. Hey, can we talk? Give me some thoughts on Gap store chart because I haven't done my own homework. I have to talk about Gaps. You have to be positive. We have to be.
Gap. Yeah. Oh man, it's a stock we talk about all the time. GAP.
55th anniversary. They're ringing the opening bell. I got to go put on a hoodie and say hello to my friends down there.
It's breaking out. It's breaking out. If it can get above this $24.75, $25 area and make this old resistant support here, it's got some room to go. Nice move off the low. I see 4 or 5 high saving. Jay Woods from Freedom Capital Markets, extended stay here on PreMarket Prep. We love you, Jay. We will talk to you again.
Love you guys.
Soon. All right. That was fun. That was a ton of fun. I mean, Triple D, we even got Triple D. He out-talked you, Triple D.
Oh, that
was incredible.
I couldn't get a word in. He's on fire. I don't want to get a word in because he was giving us so much good info.
He brought us right to the end of the show. I don't think we've ever
had AB got all of his tasks done in the background, I think, too, because AB's always multitasking. But, hey, you're all over that. GAP, Joel. I'm impressed with you. Did you do that by accident?
What?
They changed the symbol today from GPS to GAP. Did you do that by accident?
No. I did GPS first.
Did you know they had the symbol change?
No, I did not.
I didn't know
That's
that
what I was
either.
going to say. It's today. So GPS went from
I did.
GPS
No,
to
I'm
GAP.
just like I did.
Because he said gap, and you brought up GAP, and I was like, oh, Joelitis here. He's got the symbol. And then I bring up GPS. I was like, what the heck? No info available. I'm like, what the heck's going on here? And then I go GAP with you. I'm like, oh my God, it's there. And then I Googled. I didn't even know they were doing a symbol change.
I did not know either.
August 22nd, 2024, effective. Gap changes its symbol from GPS to GAP. Much better symbol, GAP.
All right. Well, that brings us to 9 a.m. We'll see if tomorrow's guest can live up to Jay Woods today. Bring some energy. Who do we got coming on with us tomorrow, Joel?
High bar. You talk about a high bar and a low bar. There's a high bar. The cow guy's coming on.
Oh, cow guys can hit the cow guy, though. We got a good guy to follow up with the high bar.
I do a fantastic job with the guests.
Sharp dressed man.
I just have to say, I am just incredible.
Great
with
song.
The guests that I bring on. But okay, folks, we'll wrap it up here a little bit late. Trading at the highs, rebound highs of the week, rebound highs of the move, opening up right there. We still got 30 minutes.
Buy the dip for the win. That's what happens. Buy the dip for the win. It might be the most eternal strategy that just continues to work, at least in the U.S. markets, maybe not in China.
There you go. All right, guys, we'll be back tomorrow morning against Scott Shalady. The cow guy will be joining us at 8:35. We do have live trading starting up right after this. Make sure to stay tuned. We will see you guys tomorrow morning.